Let's talk a little bit more about this. Charles Payne back with us, of course, and James Frischling of NewOak. So James, taking us all together, you got the bonuses, you have more investigation from the government. You say, though, on the bonus side, cry me a river?
You know, I guess I'd have to say, and it's not going to be very popular, but don't hate the players. Maybe you should hate the game.
Whoa, did he just quote you? Because that's Charles Payne.
He got it from me, and I got it from you. So,
yeah.
Well, there you go. You know, my old boss told me tall trees get the most wind, and right now Goldman's the tallest tree when it comes to the investment banking and the securities business.
And you say, really, I mean, this is not a popularity contest. You're not supposed to be liked. You know, if you want to be liked, get a dog.
Unfortunately, that is my conclusion on that one. And again, I understand the outrage. And if you look at what's going on from the regulatory perspective, they're going to be under scrutiny, and they're going to be looked at probably more than any other, any of their competitors. But the fact is, I think they've disclosed their performance when it comes to trading, because the fact is they're out trading their competitors. Maybe diminished number of competitors, but they are outperforming.
But there's also this notion, though, James, we have to admit, and another saying too is don't hate, congratulate, because right now the American public has a lot of disdain and animosity toward Wall Street, and particularly because they don't see them creating things. And that's the whole thing. You know, like the average person goes, they go to work, and a lot of people make things. You make a car, you make a blender. They can see what they've worked for. And it seems like these guys are making, and they are making billions of dollars, $100 million a day out of thin air. Makes people say, how the heck is this happening? Where's the money coming from? They must be stealing it somehow.
Goldman says their trading operations are strong. If we can, let's bring up a year chart, because this is a good question for James as well. Talking about institutional investing, I mean, the Americans, we can benefit from this if we want to, and select this stock, maybe in a 401k, or do our own investing. Over the last 52 weeks, it's up about, it's down about 6%, so it's nearly flat. Maybe that's a different way to look at this.
I think showing the stock chart is important, because at the end of the day, Goldman's first objective is to maximize their shareholders' returns. And if you look at where they were in November to where they are today, they've done that as well as any peer in their space.
Should they get the money, though, if the bonus money, given the climate and what's gone on?
I think there might be some reason for humility and maybe a little bit of discretion given the spotlight they're under. However, again, they are in a very competitive field. They you know, as I wrote, you want a friend, get a dog. I have to say, at the end of the day, they are outperforming. To Charles's point, you're right. What exactly, is...
So Charles, on that point, then, should Goldman be more public? You know, we don't talk to any of the traders at Goldman because Goldman does not speak often. Right. That's just what they do. That's not a criticism. It's just not that they're not out there. So is that what they need to do, maybe, to kind of wear?
They have to be careful about that as well. You know, me think if they'll protest too much, and they're very secretive, and that does add to some of the questions about them. But I think also, with respect to these bonuses, we saw where people were paid bonuses on trades that later unraveled. So, just the idea perhaps of them earning these bonuses, but maybe putting them in a lockbox and being paid out a year, 2 years down the road. I think as a shareholder of Goldman, I would probably say that would be a good idea, just in case some of these trades somehow unravel, because to your point, we don't really know what the heck they're doing. But what if they unravel later and these guys get paid, hundreds of millions of dollars, and at the end of the day, the company loses money? So I think a smart compromise for the company and the shareholders and the public would be to put a larger percentage of these bonuses in a lockbox to be paid out somewhere down the road.
All right. Well, that might be a solution. James, Charles, appreciate it. And we welcome any Goldman traders to come on our show, no matter what Charles says. Thank you, Charles. Ashley. A quick preview of the trading day ahead. James Frischling, co-founder and president of NewOak Capital, is joining us with that. And James, you say that this market a little oversold at this time. Why do you think that?
Actually, overbought at this point in time.
Okay.
One of my good friends and smart equity analyst reminds me that the markets choose the path that causes the most pain. I commented that on the earlier show. And right now, squeezing the shorts and punishing the people that are on the sidelines, unfortunately, like myself, it seems to be causing the most pain. But that said, I am concerned that we are toppish, and I would be selling into rallies. But then again, I would have been giving you bad advice a couple of weeks ago. So, but I'm still holding. But
you're still staying the course. You're not getting involved right now.
I'm not getting involved.
Why not? Why not? At least at this time, say, you know what? I can't fight the tape, and I'm going to jump in a little bit here because, well, I've missed it so far.
I couldn't disagree with that strategy. The only thing I would say is some of the indications we're seeing. I wonder how much more this market can rally simply because the news coming out is not as bad as it was before. But I'm still looking for the real good news. And with jobless claims coming and the consumer still, in my opinion, being somewhat battered, I'm still on the cautious side.
And we're seeing that in some of the retail sales results that we had today. There's a look at the Dow. We have, Big Lots was out, Costco was out. Some of these wholesale retailers not doing, even despite the recession and people wanting to shop in bulk and the like, not necessarily coming in with positive sales. What do you think that says about the state of the consumer right now, and what kind of investment strategy does that suggest to you?
Well, again, I think the consumer is in a save mode. That's not necessarily a horrible thing, considering how low our savings rate has been historically. You try to get into a restaurant in New York City and you don't see a recession, at least for the most part. But at the end of the day, I still think the consumer is on the sideline. I think the numbers, again, not as bad as people expected, but still, in my opinion, not good.
Anything that's just triggering a little bit of not necessarily concern, but more of, if I was going to get in, that would be the first spot that I would get in.
In terms of a specific sector in the market? Oh, God. No, at this point,
Still no. Okay, what's the one that you would absolutely avoid?
I think the run-up in financials has been monstrous. And while I recognize that was the most battered sector, I still would be taking money off the table. I think there are, the commercial real estate market is a challenge. The corporate, sector is going to be a challenge. And my concern is there are going to be more write-downs to come. So the banks are not out of the woods yet by any means.
All right, we'll see what happens. Thanks so much, James. Again, James Frischling of NewOak. Appreciate that.
Thanks for having me.
We're going to have to